46% of the United States population don't have life insurance. 46% of y'all don't even got it. So let's just be clear on that one. Let's start there. So now natural disaster, and why don't you have it? So many reasons. Most people don't have life insurance because they think they can't afford it. They're going to get around to it. I'm healthy. I don't need it. Right? So I don't even want the beneficiaries. I don't want somebody else to benefit off me dying, but I'm okay with somebody going into debt and somebody struggling when I die. All right, y'all, we're back. Here we go with another exciting episode of
Insurance Bros.
Woo! Oh yeah, I'm your co-host Eric Robinson, aka the Soul Motivator, and I got my co-host beside me,
Jacques Vaughn, aka Uncle Jacques.
Woo, Uncle Jacques, we got another scorcher for y'all today.
Yes, yes.
Woo, today's topic. What's today's topic going to be for?
Today, let's talk about. Let's see. Drums, please. Today, what we're going to talk about, ladies and gentlemen, is something that has been affecting, especially down there in that Florida area. Let's talk about disasters.
Disasters? Who? Like natural disasters?
Like natural disasters. I know we had, what was it? Hurricane Helene and Milton sweep through that Florida.
Ooh, man. This is a sensitive topic because, Jacques, you know, this topic, natural disasters, it touches a lot of categories of life.
Absolutely. Absolutely. Yeah. And it affects not just the people in Florida just from a loss standpoint of property, but let's look at some of the other things that it affects. It affects definitely the community. Yeah. Right?
That it does.
Definitely affects the state.
That it does.
It definitely affects politics.
That it does.
Economics, public safety, just the well-being of people, you know, that sometimes depending on the dynamics of a storm like that, displacement. So, you know,
because people had to evacuate. They had millions of people evacuated. Where did they go? I had a friend of mine. She was like, you know, I made it safely. She had family in New Orleans, and she's like, I made it safely traveling on I-75. The hotels was packed.
Right.
So she had to stop and rest stops, just trying to get out of there. Gas going up, no gas. I mean, it's so many things that's impacted, and it doesn't just impact the city where it happens,
right,
like a Katrina. It impacts the next city. Like a lot of people moved from New Orleans to Houston to Texas. They had to relocate.
Right.
So now you got an impact, and people don't think about, when you talk about these natural disasters, let's talk about that political impact, because I'm telling you, it's got some people riled up.
Yes. Yes, because you have so many different things, like you're going to need resources. And so what happens is if there's not enough resources coming in a quick enough time, guess who's going to get the fingers pointed at them?
They're going to point at the White House. And then the fingers start getting pointing. Is it the Republicans? Is it Democrat?
Right.
Right? Is it Trump? Is he at fault? Is it Kamala? Is she anywhere?
Is it the local politicians?
Is it the oh my goodness. Is it FEMA? Is it people stealing from FEMA? Are they doing what they're supposed to do with the money?
Is it Homeland Security? Like, I mean, so many layers that come into play when you're talking about natural disasters. Yeah. But let's paint a picture though.
Paint that picture, Uncle Jacques.
So I know we have a couple of people that we know that are in the Florida area, right? And we as we were talking, they were talking about whether they should evacuate or not. And when you're not there, because I had to take myself out of my shoes and look at their shoes, it's easy for somebody to say what you should do. You should just get on the road and evacuate. Well, I had a friend that was saying, well, she didn't evacuate prematurely because it was so much traffic trying to get out of there that it was gridlocked for hours and hours and hours.
You know, I don't even like sitting in rush hour traffic, so I can't even imagine when you're trying to evacuate a whole city for what might happen.
What might happen. And then the stress level, the stress, the tension. You know, people are panicking. They got their children with them. I mean, anything could set anybody off. If you cut somebody off, I mean, just a lot of dynamics come into play.
You know, and it's funny because this storm became a Category 5 out of nowhere.
Yes.
And it's like, this is the worst storm ever. We're talking about Milton. Now, remember, we just survived Helene, and now it's Milton coming, the worst storm ever. And it's like, in days, you got to pack up and be on a moment's notice.
Right.
And relocate. Now, it's easy, like I said, it's easy for somebody who's not in the path, right? And to sit back and play what they call a couch quarterback, right? You know, you're sitting back, some of y'all are couch quarterbacks, you're sitting back making judgments, you're making tweets, you're making posts, you're making comments, who did this, who shouldn't did this, but you ain't there.
Right.
Let me ask you all this question, John. How are they prepared for the natural disaster for them? Type in this. What do you do to prepare for the next disaster?
Now, you saying generally, what do people do in their neck of the woods? Because it's different. It's different in different places.
Okay, talk about that.
So, you know, down in that Florida region, Louisiana, Alabama, Texas, that is notorious for hurricanes. Notorious for hurricanes.
I know some of y'all saying, when you say that word, it just came to my mind. I'm sorry. Go ahead.
So that they may prepare a little different than people up north or people more on the West Coast.
Yes, in the West Coast, they got the earthquakes, right?
The earthquake.
They got the earthquakes, they got the tsunamis. Then you got the Midwest, the Hurricane Alley, right? Tornadoes. So they got to worry about tornadoes. I'm talking about Tornado Alley. So now they got to prepare for tornado. And you know one thing that is ironic, the hurricane came, but a lot of the loss of lives, they said, happened from tornadoes from that hurricane. See, how do you prepare? You're right. In up north, we got different things, you know. How do you prepare for that? You know, one of the things, Jacques, when we talk about insurance bros, there's going to be a lot of people filing insurance claims.
Yes.
And a lot of people who wish they had insurance, they want to file an insurance claim, but they ain't got insurance. Oh.
Yeah. So let's talk about that. Like, we know with a natural disaster, life insurance can't replace like items and stuff, right?
Yeah. Correct.
But what can it do for you financially?
Ooh, well, some people got loss of lives, right? And unfortunately, it happens. But a lot of times, people think I'm healthy because we know the statistic says 46% of the United States population don't have life insurance. 46% of y'all don't even got it. So let's just be clear on that one. Let's start there. So now natural disaster, and why don't you have it? So many reasons. Most people don't have life insurance because they think they can't afford it. They're going to get around to it. I'm healthy. I don't need it. Right? So I don't even want the beneficiaries. I don't want somebody else to benefit off me dying, but I'm okay with somebody going into debt and somebody struggling when I die. Oh, yeah, man. Let's keep it real, Jacques.
So that's where you see people when they least expect it. It could be a natural disaster. And it's a natural disaster not only if a storm comes, but if a life of a family member, a loved one, a friend gets taken unexpectedly and a person is unprepared. What kind of solutions do you see out there?
Man, they think GoFundMe is a solution. And I want to understand something, Jacques. We talking about natural disasters, not a national disaster. Said natural disaster can be something that happens to you. A car accident could be a natural disaster.
Yes.
You know, somebody having a heart attack, that's a natural disaster. And to you, now to the nation, it may not be a national disaster, but it's a natural disaster. And, you know, a friend of mine told me this. He said, a recession, it what happens to the country.
Right.
A depression, it was what happens to you. So the country might be in a recession, not to you. But when it happens to you, that's a depression. And so that natural disaster, we think a national disaster, but are you prepared for a disaster to happen to you? And a loss of life, Jacques, to a loved one, that's a big disaster. And we already know 46% of the U.S. population is not prepared, period.
So wait, let's talk about this. Yeah. You were talking about that you see some people do like crowdfunding or GoFundMe, right?
Yeah, yep.
And I've seen that happen. You all have probably seen that happen. Or let me ask, how many of y'all type in the chat have seen, especially since COVID, that whenever there's a loss of life, that you see people doing GoFundMes? Because that's a prime example of people that aren't properly prepared for a disaster or loss.
They're not prepared, Jacques. And by definition, insurance, we call ourselves insurance pros, right? Because we really insurance pros. But by definition, insurance is a transfer of risk. So most people are not prepared to transfer the risk to somebody else when their life goes away.
And being unprepared, then that brings a burden. See, and I see so many people take this selfish approach when they're like, well, you know, when I'm dead and gone, I'm out of here. And it's so selfish to hear people say that when it's the same people that you might see always putting up the next pair of Jordans that they're purchasing. Or you might see them purchasing the Jordans not only for themselves, but for their wives and their children.
Come on now.
And we talking about sneakers that cost how much money?
I don't know. I don't buy them.
So let's just say, what, 150 on a low end? 150 a piece?
150 on low end. Y'all see my kicks? Man, that's like a high-end shoe for me.
So we talking $150 for one sneaker campaign, one sneaker drop, and you talking about what? A family of 5, you talking about $150, $300, $600, $750 on
a lot of money.
On some sneakers.
That's a lot of money to put on some shoes. And some of y'all are walking around, that's one pair of shoes, right? I seen some of y'all walking around, y'all taking pictures of them. That's one pair of shoes. And you talk about that, Jacques, like you see people posting these things. They're posting their dinners, their food. Ooh, look at me, my lobster tail.
Right.
And you ain't got your tail insured.
Man.
man, come on now.
So let me ask y'all this. We find value in insuring what type of things?
Items, things we consider assets.
So I see people insure their video games.
Yeah.
I see people insure their appliances,
Mm-hmm.
cars,
Mm-hmm.
houses.
Mm-hmm.
I've even seen some ladies insure their handbags.
What?
Yes.
Handbag insurance. Come on. I see people, they were even sure that when they getting things shipped to their house from Amazon, they'll buy insurance just to make sure the merchandise even gets to your house.
So they're finding value in insuring those things.
Mm-hmm.
But what happens, ladies and gentlemen, when it's time to insure or make sure that your loved ones are properly protected?
I'm telling you, Jacques, it's... So y'all saying, Eric, y'all talking about this. What do you need to do? Reach out to us. Reach out to me, Uncle Jacques. Comment in the chat right here. Say, hey, you know what? I need to know more. People hit me up right now and say, man, you know what, Eric? I'm watching the show. I need to get some insurance from you. Talk to us. We can get you a free analysis. It doesn't cost you anything. A quote to let you know what it's going to cost for you and your family to get insurance. Now, here's the thing. A lot of times, Jacques, people looking at insurance only selfish reasons. You know, I went to last night I was at this golf course, and it was a reunion. And a nice, real upscale golf course, congressional golf course in D.C.
Okay.
And there was a networking function for my high school, one of my high school classes. So it's not just a reunion, just all my high school. I'm going to shout out St. John's High School, College High School in D.C. Shout out Go Ahead Cadets. So anyway, we was there at the reunion, and this gentleman is saying, what do you do? I talked to one guy, I told him I have an insurance agency.
Okay.
I said, life insurance. He's like, oh, man, you know what? I got somebody for you. Let me go connect you with somebody. And this other young brother came up to me and was like, man, I need to get in life insurance. I'm in my 30s. I need life insurance. He said, my cousin suddenly passed away, and he didn't have life insurance. He said, my cousin was 35, and he's like, it's on me. He said, this was like been less than 2 months now.
Okay.
He had 4 kids, 4 different baby mamas. He said, I'm dealing with this. It's on me now to kind of shoulder the burden of having to raise money to bury him. Now, how do we take care of the kids? I'm helping support the kids. He's like, good thing I have a pretty good career. He's very successful. He said, but I need life insurance. He said, I don't have any kids. He said, but I don't want this burden to go on anybody else. He said, man, I need to talk to you about getting life insurance. I said, man, brother, you're right.
Now, that's respectful right there.
Oh, yeah.
Because he said he didn't want the burden or his family or friends to have that burden if something happened to him.
Yeah, and that was he was thinking. He said, because I see it now. See, some of us got to wait to experience it when it's too late. And that's unfortunately. You know, we try and tell y'all, don't wait for it's too late, because everybody's one doctor visit away from being uninsurable. Let me say that again. You are one doctor visit away from being uninsurable. What does that mean? I mean, you go to the doctor, they put something in your chart, they say, oh, you got this issue, you got this health issue, you got this issue. Could be right or wrong. Maybe the doctor, you need a second opinion. But once it hits your record, see, Jacques, let's talk about this insurance record, because people don't even know that they got an insurance record out there.
Yeah, so there's something called the MIB. And what does the MIB stand for?
Medical Insurance Bureau. It's kind of like your credit bureau.
And it's almost like, you know how years ago, we can probably talk about it because it happened when we were in the car game, but it's almost like a Carfax on you, on an individual. Yeah. So every time you go to the doctor and they do a checkup, guess what? You should ask what's going into your report, because sometimes they might prescribe you some medicine and you don't even take it, and you might be able to stop some things from going into your report. Yeah, you know, that's another thing. You got 2 reports for the insurance side. You got what they call the MIB, that's the Medical Insurance Bureau, and then you have a prescription report. So they, every time you go to the doctor, go to CVS, and they prescribe you something, they put that in your files. So most people don't even have a clue what's in their files. You know, we see people when they go to get life insurance, and the insurance companies have access to all this data. Right. And you wonder why these doctors are going digital, right? Remember the old school doctors write things in paper? Right. Now when you come to the form, they have you fill out this notepad, right? They give you the iPad. Everything is digitally, right? So they can record it. Before, it was all your issues within some doctor's files. An insurance company would have to go request the doctor file. Hopefully you got a doctor who's going to send you the information. So they had to kind of guess. Now, it ain't in the file anymore. Now it's all online. Everything you do is being tracked online. Right. Man, people trying to buy insurance from me right, left and right. It's like, man, cool. They're like, man, Eric, I need that insurance. Come get me, brother. Don't y'all know I'm recording? So look, let's talk about the fact that, because people don't like to have this conversation. And we started talking about disasters, but you know, people always think that the way that you benefit from life insurance is what? You gotta die. Is you gotta die. Yeah. But we're showing you different ways to protect. Why wouldn't you want to protect your loved ones, especially when you're protected? Because I've had this conversation with some folks and said, why Why are you protecting these items? Why are you protecting these things? Why are you protecting these material things, and you don't put any thought into it when you make the purchase? But when you end up running into your spouse and you all end up making a family and having children, and you bring minds into this earth, into this world, why is it that people are apprehensive about properly protecting their family and their loved ones?
Oh, Jacques, it's sometimes, and it's not cultural, I think it's community-based, a social-based, because some communities talk about life insurance and they're insured.
Okay.
Some cultures talk about it and they're insured. But I think sometimes it's did you grow up in an environment where people talk about it? And previously, let's just be honest, previously life insurance was one of those things that it's so many levels to life insurance.
Right.
You got, sometimes they call it final expenses, just in case you die, $5,000 to $10,000.
Right.
And a lot of people, that's all they was exposed to was that cheap insurance. You know, I'm not gonna call it cheap, but it's a low face value.
Right.
So when you die, and that's all their family talked about. Put some money away in case I die. And some people thinking, well, you know what? I got $10,000 in my bank. I got $5,000 in my bank. I'm good. So I'm good for burial. But then there's some communities who understand insurance is supposed to maybe income replacement. So when you die, you got the insurance on your job, but your job owns insurance and it's usually only 1 to 2 years.
Okay.
So if you're struggling to get by on your salary now, living paycheck to paycheck, or maybe just a little bit above, how is your family going to survive for years to come? You know, the next 15, 20 years, where you don't have enough insurance to replace. So some community understand, I need insurance to replace my income. I am gone. You can't replace my life, but the money that I was making is no longer coming into my house. How do I replace that? So some communities understand the level of insurance. I need a little bit more coverage. And there's some communities, Jacques, understands life insurance, you don't have to die to use it. This can be a vehicle to create and generate wealth. Yes. To maintain and transfer wealth, right? So now they're using the money that they're putting into insurance, and you can talk about this, it's safe, it's protected from creditors, right? And it can be put into a high yield account. Let me say that again. A high yield account with zero risk. Woo, man.
So wait.
Come on now.
So what you're saying is, depending on the culture could depend on the conversation, which can depend on who gets protected or not.
Yes.
So the conversations could be as minimal as, hey, I don't think I need insurance because I got insurance through my job, so I'm good. So they might be limited conversation in that family or in that household.
That's household. They like that. We done. We good. We got insurance to bury me. We alive. So we don't even talk about having private insurance or personal insurance on your own. That's
so then there's a conversation where somebody might be a little more educated and say, look, let's make sure that everybody is properly protected. And so if anything happens, then nobody will be burdened if somebody happens. That's the next level of conversation.
That's next level of conversation. Some families have it, some communities have it, because you was taught, and that's how we pass down. So everybody's not in the same boat. You can't say this white person, this black person, this Asian person, that they all have the same conversations, because sometimes it could be social and it can be economic groups. Okay. I realize sometimes it's a passed down thing from generations sometimes, Jacques, in communities. So that's why I'm just cautious. I want to say one community versus the other, but that's so true. And then you got the other group.
So then there's a group that understands generational wealth, that understands how you can use life insurance to create, maintain, and transfer generational wealth.
Yes.
So because they understand that, they have not only the conversations early on, but they continue those conversations through generations.
Through generations. And see, Jacques, you gotta look at this. We're living in a time where there's a lot of new generational money. Let's just be honest. You know, your mom and dad might not have that $200,000, $300,000. The average income in the United States of America is $60,000. Okay. You know, I was listening to something, somebody said, one report, that the top 10%, to be in the top 10% of income is $173,000, I think, around $170,000. That puts you in the top 10%. The top 1% is like $360,000 a year income.
Okay.
That's the top 1%. So the top 10, we always talk about these wealthy, rich people. The top 10% is only $176,000. That puts you in the top 10%. So 90% doesn't make that. So a lot of people are hitting new wealth, new money. So these conversations for people who have, some of y'all watching, got these good jobs, the $70,000, $80,000, $90,000 a year, $100,000. These are conversations that maybe your parents didn't have with you because your parents wasn't in that income range. Or sometimes, to be honest with you, Jacques, let's keep it a buck. Your parents may or may not looked like the type of person that the wealthy or people with this knowledge, because every agent wasn't wealthy. themselves, but they could pick and choose who they wanted to do business with. So they may only want to do business with somebody who looked like they wanted to feel with. You with me? Somebody you're comfortable with. They may only want to do business with somebody who has certain kind of income level. So your parents or grandparents didn't have access to this information. Now here you come with new money and you don't have access, or you don't have the knowledge because it wasn't passed down to you.
So wait, so now it comes down to who has the information and what are you going to do with the information when, if and when you get it? Because some people didn't have access. Now it's almost, we know that they're bringing Wall Street to Main Street with this information, right? So let's do this. Let's take probably the next 5 minutes and let's show what and how. Let's take it back to maybe the Rockefellers, or take it back to the Rothschilds, or take it back to one of these families that understood how to transfer wealth with life insurance, and like what that looked like back then, when like what they do, put somebody was informed and educated, and then they said, you know, let me take out a policy because we have this much money, let me set the family up. And how does that look?
Cool, you say set the family up. See, first y'all, let's talk about this. There's what, and y'all can Google this, your family businesses, right? And so there's a family union. So that's what they would set up. And so they will have a person who's now handles this part, a lawyer, person who handles the finance part right here, right? And person who handles this, and the person who handles that. So they had these family components to set aside, okay?
So that's what they call the family office.
The family office. So they would have their own family office, and they had individuals who handled specifically your insurance needs. And so they had an expert in there. And so in that family office, they had attorneys. They may have somebody, a PR, in case some little Johnny goes sideways, something goes sideways. They had a person in that family office. That family office usually comprised of 6 to 8 different positions. So y'all can Google that. So, but typically to set up a family office, you need to have $1 million to $2 million of net worth to even get considered. In some cases, the real ones started around, now it's like $1 million plus, but it used to be like 10 million plus.
Right.
So unless you had $10 million, you couldn't even set up your own family office. So here's the thing. Now, the Rockefeller, they had the money. They set up the family office. They had an insurance expert in the midst. So now maybe my cousin, the people around me, little Johnny, his friends and cousins, you know, little Johnny Rockefeller, his friends, I may share some of this knowledge with them because little Johnny was connected to the Rockefellers that had the family office.
Okay.
So now some of the community, they may not all been rich, but they got some of the information because the wealthy people are sharing it with. Now some of you, your ancestors wasn't connected to them. Are y'all with me?
So they didn't have access to the information.
They didn't have access to the information, Jacques.
Okay.
So what we're doing is bringing access to the information. So that's how the wealthy did it. And they used insurance, life insurance particularly, to put some of their wealth into insurance products. Because they got insurance products, Jacques, where you can put your money into it, take it out, and let it gain interest tax-free.
Hold on. So you saying you can take your money, put it to work for you, access it, and you can access it to do whatever you want to do with it.
Whatever you want to do with it.
Now, the question is, do you have to pay it back?
You don't, it's your money. You don't have to pay it back. That's what we talk about, becoming your own bank. See, what happens, the average person puts their money to a 401k.
Yes.
See, these are IRS tax codes. They are vehicles or products. Whether you, a 401k is just a designation. It's a code designation that says, this is how we tax this money. You're putting your money into this account, and this is how we're going to tax it. We're going to not make you pay income taxes today because it's your job. So, but when you go take the money out, we're going to tax you. And if you need the money for any reason, we'll give you access to it at a penalty. We're going to charge. We may penalize you up to 50%. Depends on what you need it for. If it's not like maybe it's get a new home, maybe for education and for medical expenses, other than those few qualified situations, we're going to charge you a 50% penalty on your money.
So wait, so why are so many people still putting their money in these 401ks and these 403bs and these retirement plans when if you take the money out, you get penalized, right? It's not growing tax-free. Not only when you take the money out, you get penalized, but you're required to put it back.
Yes.
And you can be taxed up to 50%. Why are not more people doing what the wealthy people do and utilize those tips, strategies from
because they listen to their cousin, Uncle Bob and Billy, who's been on the job for many years, and that's what he's like, man, I got my 401k, I got my pension plan, and you notice the people they're getting money information from aren't rich, aren't wealthy, and haven't been around the rich and wealthy. So they're getting information from people who that's what they have been trained and most people get a job, and they're going to find, how do I fill out the form? I've been an employee many years. right? I've been a manager for many years. And people ask me, hey, Eric, what should I put on? And at that time, I didn't have the knowledge. I'm like, hey, check this, check this, check this. Get your 401k. So you're getting information from people who are not licensed insurance providers, not licensed financial professionals.
So let me ask you this. How can these folks, how can these viewers, how can we get the information to the people viewing?
You got to comment. Y'all got to, our information is right here.
Yes.
Below. You got to hit us up. Stop looking and watching this video and going on and looking at a whole bunch of YouTube videos. Reach out to us now.
Yes. All right. So stay tuned for part 2 of this deep discussion.